What's up everyone, it's Caddy with Money Investing. So in this video, we are going to be talking about a trade desk, ticker symbol TTD. A lot of you guys have been asking questions about this company, so we're going to break that down. I'll go over the fundamentals, I'll go over the intrinsic value, I'll go over the technical analysis on this stock as well. So everything is going to be covered. As always, if you enjoy this video, find it helpful, make sure that you drop a like. That's the least I'm asking of you, is to subscribe and drop a like. And of course, check out the links down below if you're interested in joining our money investing community. I posted today a members only video going over 4 potential trade ideas for us to look into in the weeks to follow. So again, if you want to access all of our private videos, trade alerts, buy and sell alerts, options alerts, everything's going to be included with the link down below if you're interested in joining. So the company, again, Trade Desk, as we already know, is a global technology company that specializes in programmatic advertising, right? So they're on the buy side of advertising, kind of like the opposite of some of the sell side advertising companies that we've already looked at. But it's just a way for the company to basically buy and sell digital advertising in real time. They work with a lot of brands, with a lot of companies. So these right here are going to be the variety of products and services that they offer. So DSP, which is their demand side platform, software platform that allows advertisers to buy digital advertising inventory. And the DSP is one of the largest in the world with access to over 200 billion ad impressions per day. DMP, which is going to be data management platform, is a software platform that allows advertisers to store and manage their first-party and third-party data. And the Trade Desk's DMP is one of the most comprehensive in the industry with support for over 100 different data sources. And finally, a measurement platform. Trade Desk's measurement platform allows advertisers to track their performance of their programmatic advertising campaigns. And this includes measuring the reach, frequency, engagement of their ads, as well as the ROI of their campaigns as well. So what we do, we provide self-service platform to agencies and brands that deliberately pick from over 500 billion digital ad opportunities per day. And 95% of our ad spend comes through mastering service agreements, or MSAS. And this right here, again, they are on the buy side of advertising because brands and agencies can basically buy all these different ads from their inventory and run them on the platform as well. So they've got a massive TAM, $830 billion of total global ad spending. 165 billion of that is coming through linear television, and 135 billion comes through digital media, excluding search and social. So CEO pretty much mentioned that we believe advertising will be transacted digitally. The future of all media is digital and programmatic, and eventually all media will be digital and it will be transacted by machines as well. This right here is basically the ad spend by industry. So they're not concentrated on one particular sector or industry. It's kind of broken down into all major verticals like health and fitness, food and drink, automotive, technology, computing, shopping, home and garden, personal finance, business, travel, style and fashion, you name it. It's broken down into several different categories and sectors. They have been able to consistently grow revenue since 2015 every single year. They've moved in the right direction for revenues, now sitting at just over $1.5 billion as of last year, and that was a 32% increase on a year-over-year basis. So again, you can see some of these bar graphs, absolutely phenomenal growth here coming in for revenue and gross profit, going from 32 million to over $1.4 billion. That's that's got to be like 4 to 5 times growth in a gross profit. Operating income has stabilized a little bit, so it's gone from 80.8 million, so $800,000, to over $147 million. They kind of peaked at around 144, 112 here. So 2020 was pretty strong, and then they came down, and once again, trailing 12 month is hitting a new high of $147 million once again. This right here is going to be that diluted earnings per share, sitting at about 26 cents per share on a trailing 12 month basis. 25 cents on a trailing 12-month basis, and they once again peaked in 2021 at 28 cents per share, and they dropped pretty significantly last year because of the decrease in ad spends. We learned from Meta, we learned from Google, we learned from Snapchat, we learned from a lot of companies. The digital ad space was definitely struggling back then, and now we're seeing a bit of a rebound in this sector. And as a result, Trade Desk is also doing really well in terms of those EPS. Share count has been a little bit more stable more recently. Since 2017, they've gone from 440 million to 507 million. So they've still been able to grow the share count. They've been diluting a lot in terms of their shares outstanding, but it's at a lower rate, right? So it's at a slower pace than compared to when back then 2014, from 131 million to 440 million. That's a significant amount of share dilution compared to what we have seen over the last 4 to 5 years. EBITDA also growing and moving in the right direction. So it's gone from about $1 million to over 209.5 million, and free cash flows have also moved in the right direction, which we'll talk about in the financial summary. But over 81% gross margins. Net margins are very, very low, 7.4%. That's something the company needs to work on because that is horrendous. 81% gross margin and only trickling down to 7.5% in a net income margin. That definitely needs a lot of improvement, and that is also shown in their very, very low return on common equity, capital, and assets, that the company is not that efficient in their use of capital, equity, and assets. They need to get better. They need to absolutely do better when it comes to profitability. Balance sheets, phenomenal. $1.4 billion of cash with about $250 million of debt. So again, net debt is going to be negative at $1.1 billion. Very strong current ratio, very strong quick ratio. Debt to free cash flow doesn't really matter because they do have a lot more cash than debt on the balance sheet. Valuation is crazy for Trade Desk, something that we have talked about in our videos previously as well. 67 times earnings on a GAAP basis, of course, in the triple digits. We got price to sales also ridiculous at over 19 to 21, and price to cash flow trading at over 49 to 60 times cash flow. So if you got a company that is consistently growing revenues, profits, moving in the right direction when it comes to kind of capitalizing in this space, but at the same time, you've got very low net income margin, not that great efficiency with respect to return on capital, equity, or assets, incredibly high valuation. So this right here is going to be that financial summary for Trade Desk. Revenue since 2018 has grown by 29%. Gross profit has gone up by 61%. Operating income has gone by 6.5%, and net income has gone up by 8%. That alone, these four numbers alone, tell me everything I need to know about Trade Desk's capital efficiency. It's poor. It's subpar. If you're able to grow revenues by 30% and your net income is only growing by 8%, that alone tells me the significant increase in operating expenses in order to make the increase in revenue, right? That is a problem. That is a problem long term, because if they keep increasing operating expenses to grow the revenue, profitability is going to continue to struggle, and that's why the margins are so low. Free cash flow has gone up by 57%, shares outstanding up by 2% in that time, and EPS is up 5.7%. Again, really, really low, and 54% increase in free cash flow per share as well for the company. So if you move over to the analysis for the growth rate expected, so $1.24 expected to grow to over $8.83 by 2031. Those numbers right here are going to translate to over 23%. I'm going to take analysts at face value that they are indeed going to be able to grow by 20%, because the last 6 years have not been anything close to that. We're not even crossed over 10% in EPS. So I'm going to take them at face value that they're going to be able to grow margins better, and operating expenses are going to be controlled, and net income is going to grow much faster than what we have seen over the last 5 to 6 years. So 24% is going to be that growth rate, with a share dilution of about 2.85, almost 3%. If I plug in some of those numbers, so 20% growth in net income, 25 times PE multiple, 12% discount rate, 10% margin of safety, a little under 3% in share dilution, we get to a fair value of $34. And right now, of course, it's trading at $75. You can take a look at the sensitivity grid as well, depending on different growth rates and different P multiples. You can kind of figure out, okay, where's that fair value going to be? If I increase the actual, let's say that I increase the actual growth rate to 25%, right? Let's just do 25%, 25 times P multiple, and share dilution, I decrease it to 1% from 2.85 to 1%. Even then, the fair value sits at $45. Compared to the price right now trading at 75, right? That would still mean at least a 40% downside needed for Trade Desk to be trading at its intrinsic value, according to my analysis, my conservative estimates on this company. So going over to Trade Desk here, you'll notice again, it did drop after the earnings last week. It was down a little bit over 12%. And this right here are going to be some of the support levels that I'm going to be watching for this stock right over here. Of course, it was trading at those levels up until January. So earlier this year, it was trading at these levels before rallying over 128%. So very, very strong momentum, very strong rally coming in. But that right there is going to be that support level to watch for me. 45, low 40s would be ideal for Trade Desk at around those prices. We've got a resistance sitting right over here. At roughly $91, $92 per share. And of course, right now trading right above that 21 exponential moving average. So if and when it actually breaks down below this level, I wouldn't be surprised to see some more potential downside because the valuation is just way too high. I mean, 21 times sales is crazy. It's absolutely crazy that it's trading at such a high valuation. And so like I said, fair value, $44, $45. Ideally, it would be closer to the first one that we calculated, right? So that's going to be sitting roughly at $34. So anywhere between this green rectangle is going to be a fantastic buying opportunity for Trade Desk because it's going to be trading at an intrinsic value, consistently growing revenues. Profitability is a little bit of an issue, but it's got excellent balance sheet. And hopefully they don't dilute shareholders left and right. So that's going to be it for today on Trade Desk. Let me know your thoughts down in the comment section below. What do you think about this company? Don't forget, we do have members only private videos posted every single week. So this right here is a brand new video that I posted for trade ideas for us to take advantage of in the markets. So link's going to be down below if you are interested, and of course joining our money investing community, and of course getting access to all these member benefits as well, including the private videos. Subscribe, make sure that you drop a like. As always, happy investing. I'll see you all in the next video.